Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Welcome to the PS60 theory. So what the hell is the PS60 theory? I already kind of forgot. So if you guys go on like ChatGPT or Gronk, it'll give you a better example. But what the PS60 theory basically is the idea that stocks trade from supply to supply and demand to demand. What is supply? What is demand? This is basically all these weird little things, all these weird lines that you hear sometimes people on the recorded videos, like on the nightly videos on YouTube. So I'm like, hey, Wyatt, Dan, how come you have all these stupid lines? And I laugh and I go, no reason. These stupid lines are your lifeline. This is where your ability is to understand where emotional buyers meet technical sellers, that is supply, and emotional sellers meeting technical buyers, that is demand. And every single line here, right? Every single line here represents an area, a history of the stock where price action was discovered. These are not just random prices. At one point or another, okay, this stock had some sort of war, some sort of battle. Maybe I shouldn't be saying that in this time, and this is the time of the Iran, now, Israel, now U.S. War. But that's kind of it. It's the battlefront. It's price discovery. So all these lines, when you're a brand new trader that you deemed unnecessary, all of us can pretty much testify. We could put our hands on the Bible and say, yeah, they're pretty necessary, right? This is where price discovery comes at some point or another. Sometimes, and this is the coolest part about pivots and supply and demand, sometimes these stocks stop literally to the penny, right? We've seen that so many times. We're like, holy crap, this thing literally stopped to the penny. And sometimes they overshoot. And again, we'll kind of get to that overshooting part when we cover the bounces and the rejections a little bit later. But the point is, all this is price discovery. All this is areas that you can make an educational, right? An educational decision, choice that you believe where a stock should take off, where a stock should stop, and where a stock potentially could get rejected. And it's very, very important because if you're trading without supply and demand zones, you are guessing. Right, guys? You are guessing. It's like, I give you a perfect example. It's like all of us who were in CRWV on Friday, right? And we said, well, if we can get to 186, let's get down to 1 to 10% of our position. We didn't just pick 186 out of the sky, right? We didn't pick 186 out of the sky. We picked it because there was a supply zone, right? There was a supply zone right over here at 86. And the ironic part was, look at the high of the day, right, guys? Everybody remember? Look at the high of the day. 186 was literally the high of this channel here. And again, that really shows you how stocks trade from supply to supply and demand to demand. So now the question is, well, how do we take advantage of this, right? Dan, how do I make money with this? Isn't that the whole point? Yeah, it's cool and all that we could identify where stocks start, where they stop. But how do I take advantage of this? How do we do it, right? How do we put ourselves in the position that we're putting ourselves in a situation that we are trading or about to trade a stock that is not moving, but is tradable? And it's very, very important to understand. And that's kind of where this segue starts here, right? Guys, always understand this, okay? Every stock trades, right? Every stock moves. So when you hear somebody on social media talking about, well, this stock is moving, that stock is moving. Guys, the market's open, right? The market's open. Every single stock is going to move. Okay. Tesla moves, Apple moves, hell, AMC moves, right? We only talk about the highest quality stocks in here, right? Every stock moves, but the problem is 99% of stocks are not tradable. And the problem is majority of traders, especially new traders, they don't understand that. They believe that every single stock, because the market is open, it's tradable. It's not. And let me break that down for you. Okay. I trade pivots. 90% of my trades are pretty much the same 10 stocks, realistically. And then, then I'll go, through like the CRWVs of the world, like I traded on Friday, so forth and so on. But for me, 90% of my trades are going to be beta names. So Tesla, Tesla, Apple, Amazon, Meta, Nvidia, the same, all the major lunatics. So if those stocks are not in play, I can't trade, or I have to put myself in a situation is I have to trade other things. Hence why I traded CRWV twice on Friday, because majority of my stocks, well, all my stocks were not in play. And that's the problem. Every stock moves, but not every single stock is tradable. So what you need for a stock to be tradable, and this is kind of how we kick off the PS60 theory, is number one, you need a range, right? Now, what's a range? In my opinion, for a stock to be tradable, it needs to take out at least a week's worth of range. So that's at least 5 days. So if you look at, for example, I'm going to use this week's stocks that broke out of a range, and you're going to see there are no beta names, because we all know this whole week, beta was just kind of going sideways just because everybody was, kind of sitting on the sidelines waiting to see how far and how much of a participation will the United States be involved in this whole fiasco in the Middle East. We obviously got our answer last night. So we're not going to use any beta names as examples this week, but we're going to use second and third tier names as an example. Remember, the PS60 theory, although I trade beta names, right? The high mega cap technology names, you can trade anything, right? As long as that anything is any asset class, you can trade Bitcoin, you can trade crypto, you can trade futures, right? You can trade small caps, you can trade mid caps, anything your heart desires. But here's the but, right? Here's the big but. The but is whatever asset class you trade, there has to have a lot of liquidity, right? So when you look at Bitcoin, for example, when you look at Tesla, for example, right? You need liquidity and you need a range, okay? You can't just randomly trade a $2 stock that's trading 18,000 shares today, right? You're not going to get anywhere. It's also, again, why are you trading a $2 stock that trades 18,000 shares? But that's a whole different conversation for another time. So number one, you can trade any single asset class, okay? So just because I trade Tesla doesn't mean you have to trade Tesla, okay? And it's a very, very important to understand that. So that is a very, very important part. So now the second thing is you need a range. So like I said, I like potentially at least a 5-day range for a stock to be not necessarily be a macro expansion, right? Expansion, potentially big move, but you need at least a 5-day range for it to get a little bit of juice.